Finance TikTok is full of advice. Buy the dip, dollar cost average, dividend stocks, options trading. Everyone has a strategy, but does any of it actually work? I took 5 of the most viral pieces of finance advice and tested them with real market data. No opinions, no theories, just numbers. Claim number 1. Buy the dip. The idea is simple. When the market drops 5% or more, you buy. Then you wait. I tested this on the S&P 500 over the last 20 years. Every time SPY dropped 5% or more, I simulated buying and holding for 90 days. The result? 61% of the time, you made money. Average return per trade, 4.9%. But here's the catch. You need to actually buy. Most people freeze when the market drops. The strategy works. The psychology does not. Claim number 2. Dollar cost averaging beats lump sum investing. TikTok loves this one. You invest a fixed amount every month regardless of price. Sounds safe. Sounds smart. I tested it against putting all the money in at once. Over a 10-year period, lump sum beat DCA 100% of the time. Every single time. Average return 258% versus 107%. Why? Because markets go up more than they go down. Waiting to invest means missing gains. DCA feels safer, but the math says otherwise. Claim number 3. Dividend stocks are free money. You buy a stock, it pays you every quarter, and you reinvest. Free passive income. I compared SCHD, the popular dividend ETF, against the S&P 500 over 5 years. SPY returned 82% total. SCHD returned 53%. The dividends were not free. They came at the cost of growth. You are trading upside for income. Not wrong, but definitely not free. Claim number 4. You can make easy money with options. Sell covered calls, collect premiums, repeat. TikTok makes it look effortless. The data tells a different story. 70% of options traders lose money. The average retail trader loses $2,000 per year on options. The house always wins. The few who profit treat it like a full-time job. Not passive, not easy. Claim number 5. Real estate always goes up. I tested this by comparing VNQ, a real estate investment trust ETF, against the S&P 500. Over 10 years, SPY returned 329%. VNQ returned 73%. Real estate does not always go up. And when it does, stocks often do better. The myth of real estate as a guaranteed winner does not hold up. Here is what all 5 tests have in common. The advice is not wrong. It is incomplete. Buy the dip works if you actually buy. DCA works if you need discipline. Dividends work if you need income. Options work if you treat it like a job. Real estate works if you pick the right market. The problem is not the strategy. It is the presentation. TikTok sells simplicity. Investing is not simple. It is a series of trade-offs. So what actually works? The boring answer. Buy a broad index fund. Keep costs low. Invest consistently. Wait. That is it. No strategy beat the simple approach of just holding the S&P 500 over a 10-year period. Not dividends. Not options. Not real estate. Not market timing. The best investment strategy is the one you can stick with. And most people cannot stick with anything that requires active management. Finance TikTok is entertainment, not education. The advice is real. The simplicity is not. If you take one thing from this video, let it be this. Do not trust anyone who makes investing sound easy. It is not. But it does not have to be complicated either. Find a strategy you understand. Stick with it. Ignore the noise. If this changed how you think about finance advice, subscribe. I test investment strategies with real data. No hype, just numbers. Drop a comment with the next viral claim you want me to test.